Hello and welcome to Crux Investor. We spoke earlier today to Alex Sukernick, who is the CEO of NOVR Royalty. They're the newest royalty company on the block. These guys are after nickel and copper. We'd like a royalty story. We also believe in the EV thematic. So if you want our opinion and thoughts on this conversation and the company itself, you can get that at cruxinvestor.com/club. You can also find company reports on there, commentary from other market experts from around the world. There's summaries of other interviews that we've done. There's training courses, and of course, our investment community on there sharing their thoughts and ideas with each other. And if you go now, there's a 7-day free trial. And of course, we'd love your feedback too. So do leave your comments below, give us a like. And if you want to see what we talked about, take a look in the description below. Alex, how are you doing, sir?
Doing excellent. How are you?
Not bad. Where are you? Whereabouts in the world are you?
I'm calling in from New York City.
Alrighty. How are things there? All good? Back to normal?
Well, a lot better than they were in the spring. So we're enjoying it while we can.
Fantastic. Hey, well, look, thanks for coming on. We do love a royalty story on here. We say every single time. And you can tell us a little bit about your royalty company, NOVR Royalty. So when you kick off, give us a 1-minute overview of that, and we'll pick it up from there.
Okay, thank you very much. So we started NOVR in 2018, and the central idea was that although there were a lot of royalty companies in gold and silver, we saw a very strong macro trend in electrification, and really in the terms of how the world wanted to produce energy and how they wanted to live. And the two commodities we saw as driving that were copper and nickel. So we decided to start a royalty company focused on copper and nickel, and that's what we've focused on since.
Fantastic. 2018 was a slightly different world. I think people, seeing Tesla doing their thing, and I think perhaps they thought that it might be coming down the line. But this EV revolution has been quite slow in the offing, hasn't it? So can you talk to us about your business plan day one? Because I think the market hadn't caught up with your thinking. So how were things in the early days once you'd kind of got your plan in place?
Well, the thing is, when we just started, I think people were, and I think still are to a degree, thinking that this electrification and EV movement is a phase. So they look at year-on-year numbers and they're like, oh, you're not as high up as much as we thought. This whole thing was probably going to go away, right? No, it's not going away. This is a permanent long-term trend when you look at just basic preferences of consumers, what the governments are doing. So, we are in this for the next 20, 30 years. That's our view. And so, short-term numbers are going to do what they do, and that's fine.
True. So people know, precious metal royalty companies, flavor of the month, they're worth billions of bucks, or if they aren't, they think they're heading there very, very quickly. Battery metals, less sexy. Price of copper, price of nickel has just been appalling for the last couple of years. It's been a tough environment for you, hasn't it?
No, not at all. The thing is, we've had a lot of success growing the company this year. We just announced a major acquisition today of a great project called Taka, which is controlled by First Quantum. What we see is the world is focused on precious more right now. We're quite happy with that because we see tremendous strategic value in our commodities. And I think that's becoming clear in terms of what the industry wants. Eventually, the markets will catch up to it as well. So we're not too.
I know, but my point was, I guess when you're starting off and you're going out raising money, which you would have done in 2018, it would have been a tougher environment with which to raise money than if you said you were a gold royalty company. That's my point here. And the deal you've just done, great, but 2 years down the line, what was it like back then? What were the hurdles you were having to overcome?
Well, I think we had the benefit of some excellent investors who had done well with Metalla, and sort of they appreciated, I think, what we could do, when we started the company. But you're right, people were wondering, well, how are you going to do this? What's the business plan like? What are the projects like? But I think it comes down to really demonstrating, how you see the value creation and what you put in the portfolio. We started out immediately wanting to put the world's best projects in the portfolio, and that's exactly what we've done. And so I think people have responded to that pretty well.
Right. But again, back then, there's only so many ways you can tell the story of supply demand on the EV thematic, and where people sort of look at you with glazed eyes and go, okay, not yet. The market says not yet. So the early days, how much money did you raise in year one?
We raised 2.6 million Canadian in our first raise.
Right.
So $2 million went for the first acquisition, and then 600 grand went into working cap.
Right.
So it wasn't the easiest market, but that's really the only time you can start a good company, really, because you have to see the opportunity. It has to make sense to you and your team, and you have to pursue it when others aren't doing it. So there's really no other choice, to be honest.
Okay, and then in 2019, you picked up the Dumont asset, which is obviously now part of Waterton.
Yes.
You obviously had to raise a bit more money at that point. What did 2019 look like?
Well, when we started in 2018, we just put up some basic seed capital among the people, the founders. When we did our first acquisition, which was Dumont in January 19, that's when we raised the 2.6 million Canadian.
Got it.
And so 2 million of that went to pay for the acquisition. We also paid $1 million in stock. And then we took the remainder of that working cap and just went looking for more deals.
Right. So, but tell me about, did you do any other fundraisings in 2019?
No, that was the only one.
Right. I mean, this feels like small time, because you just said to me, you go after the big projects, and copper projects are not cheap. The big ones are not cheap. These are big projects. Nickel, likewise, hundreds of millions of dollars needed. So how do you walk in with your $2.5 million or whatever it is that you've got today and compete? Mm-hmm. How can you really say that you're after the best possible projects?
Well, the thing is, what we do is we don't target the mining companies themselves. We target the third-party owners who own the royalties. We need liquidity. So when we bought the royalty on NOVR Union in February 2020, and we raised just below $6 million for that acquisition. That was a Chilean gentleman in his mid-80s who needed to retire. He needed money for his estate, and we saw value, and it worked out very well for both of us.
Right.
So investors are very keen to fund those types of acquisitions.
But it must still be tough, because again, we've spoken to a whole bunch of gold royalty companies at the moment. Gold's going through their silver going through the roof. It must be tough, to go and have those conversations. People don't yet want exposure to battery metals, do they?
Well, we've been extremely well supported here, to be honest with you. The market. We went public a week ago. Our last financing before going public was 50 cents. I think the share price is just over $1.50 right now this morning. So to be honest with you, we haven't felt this so-called pessimism. People support the story. I think they understand what we're trying to do long term. I think a lot of that really has to do with how you focus your business and kind of what is the value proposition for investors. If you're a gold royalty company, you're out there buying assets amongst very heavy competition, and it's very hard to get first-tier assets. Everything we put into portfolio to date has a chance to be an asset in a major company's portfolio. So it's a very compelling metric, I think, and I think the market sees that. Right.
Okay. But talk to me about some of those projects. Some of them are more likely than others, but you've got to take that opportunity when it's there in front of you. So you're trying to associate yourself with big name companies, big projects, some of which will work and some won't. So how do you construct that blend of approach?
I think, listen, we've got a very experienced technical team, sort of among the people that we have associated with the company. Our founding chairman was a gentleman named Parvitz Versangi, who was the chief operating officer of Valley Inco. And then kind of amongst the other people involved with the company, we have some very seasoned, high quality technical people who can evaluate these things. So I think that gives us a very good metric to start off with. You can never cover off all the risk. The nature of mining is risk, but what you can do is, as long as you have the right value metric and you consistently transact, through diversification, eventually you create something that, kind of can help it succeed in at least some parts of the portfolio. And I think that's the focus.
But again, when you're kind of starting off, you've got less levers to utilize, right? So I appreciate what you're saying about risk, and mining's a inherently risky business in which to invest, but you're going to have some projects which are much earlier stage than others, and others which are more advanced. And the more advanced they are, the more costly it's going to be for you. So you need to kind of paint a picture which makes you look bigger than the sum of the parts at the moment, just to kind of get things going. Basically, you're going to play the market a bit to be able to get to where you need to be able to get cheaper money or cheaper facilities in place. It's a game, right?
Well, the thing is, I think what you're trying to do is just, with the market and all of our investors who have supported us, they want to see your focus. What are you trying to do out there? And that's really the whole thing. You can call it a game, I suppose, but We've been focused on the same thing from day one, and yeah, people have backed it. That's all I can tell you. Yeah. So, I mean, I never felt that we were, even when we had 600 grand in working capital, I never felt that we were swinging above our weight size. I mean, it's just a matter of what do you want to do. And there's people that we're buying royalties from to whom we provide very valuable source of liquidity and upside. And so they've been engaging with us, I think, with a lot of appetite, and it's good to see some of those results.
So how do you step this up a bit? You've listed now, right? And say share price is good now, but you're still in the sunny, the sunny euphoria of this post-marriage phase you're in, right? And the shine will come off soon until you start making some big moves. So look at a company like Nomad Royalty recently. They walked in and with a Cisco and got a big portfolio day one. How do you use someone like Parvez to walk in through the door and get you some bigger transactions to be able to actually create some real meat and meaning to this? Otherwise, it's it's slow accretive growth.
Well, I mean, the thing is, when you look where we have royalties in some of the world's biggest copper development projects already. NOVR, Union, Taka Taka, Dumont and Nickel will be that. Janus Lake is early but promising. So we already have something that I think people who own other royalties will want to be a part of. And we know how to grow a royalty company in terms of creating value. So we brought on board. I think obviously the Natal experience is very instructive. So we already what we wanted to do in this initial phase was build really a critical mass of value in the company and clear focus, so that people you deal with know what to expect. So at this point, we're very encouraged with what we see in terms of response from counterparties who want to be a part of the company as shareholders. The people you buy royalties from, especially for sort of high quality projects that are not yet producing, a lot of the time they don't really have a good way of monetizing them. Because if you're just standing there waiting for the cash flows to come, it may take a while. It makes much more sense to put them into a vehicle like ours, which is more diversified, which is constantly adding to the portfolio. And the market sees the value of that quality and diversification. And that's something that can be reflected. So in terms of providing both liquidity and upside for royalty owners, we think that this is a pretty good choice.
No, it is. I guess what I'm trying to get people, watching the show to understand is that, so it's not all sunshine and glory. These are calculated risks on your behalf. And, we talk about something like Janus Lake and Forum Metals. Rio's in there. Now, Rio's a great name to be associated with any project, but the reality of that is it's early days. They've just, Rio's just got through phase one. They've got a 5-year program there, of which they can opt out at any time. And companies like Newmont and Rio, they do this all the time. So you've taken calculated risks about the sorts of projects that you're after. Taka Taka, you've got some massive ones in there as well. But again, they've got to get past certain hurdles before people can start seeing the real value to you and can get some sort of line of sight towards future revenues. Because again, none of these are anywhere near revenue flowing stage. So how do you as a business move things forward on that basis? Do you have to get a facility in place? Do you have to go and raise some money? I mean, how does it work?
Well, I mean, kind of right before we listed, we put in a financing facility in place with BD Capital for $15 million. So we announced that right before trading on the first day. So they've been a shareholder of ours since February when we did our financing to acquire NOVR Union. They liked the strategy, and we obviously had some things on the go, and they put up a facility to allow us to do that. So that's the kind of shareholder support you really want to see.
And what's that look like? What's the cost of that money to you? And again, because that's really, really important to you. Because again, you're not cash flowing for some time. So how do you weigh up the cost of something like that facility?
Well, I think the way that we saw that, it was an excellent backstop for us in order to be able to accomplish our growth plan. So the way that we saw the value building exercise for the company was you wanted to build a base of value through really the most unique projects you could. And because then those things are like oceanfront properties. They may be far away from production, but the value is always there and it actually improves over time. So this is where you want to start. For instance, when you look at say Taka Taka or NOVR Union, I agree with you, it will take a while. But once they get going, they're probably going to outlive our children. So the thing is that's the kind of thing that you want to own. And so we obviously want to put some cash flow into the portfolio as well. And we're very busy on that front, because you do want to diversify that for sure. But it's just a matter of kind of intelligent value building in the company. You have to start in the place you think is most crucial, and that's what we've done with really building a top-notch asset base. Now we can sort of move closer in duration to today, put some cash flow in the portfolio. That's definitely a part of the plan. But really also just keep on executing the plan from the very beginning, and that's acquire the best quality projects you can consistently. So that's what we're doing.
Okay, that's important. Because to me, I think that's important anyway, in the sense that you've got some big future ticket items there, beautiful, lovely, revenue flowing, but you also have to show people that you're looking after the kind of less sexy side of things, but however do generate cash flow to kind of alleviate your problem, your nearer term problems. So how do you go about identifying those? Because again, you're not a big player yet. What's the market cap today?
About 60 million.
Right. Okay. So it's relatively small company. How do you get noticed, and how do you compete, and how do you keep the cost of competing down?
It's interesting. So far, because we are focused away from precious metals, we haven't yet seen a flood of royalty companies coming in, to compete with us. That said, everything is competitive by its nature because everybody knows what the wider world is like. So you have to always keep that in mind. For us, to be honest, where we had success is where we saw the value that was significantly in excess of what we had to pay. And then it was a matter of giving the royalty owners a way to benefit both the cash and returns. And what we've done, our first financing was 25 cents in January 2019. I think right now we're just over $1.50 this morning. So I think everyone's been associated with the story has done well. And it's just a matter of intelligent value building and kind of doing the right things. I mean, there are no miracles out there. I mean, you have to do a lot of hard work to understand where things fit. And we spent a ton of time preparation. I mean, you look at our 2019, we did the deal in Dumont in January. We did a small acquisition of some exploration royalties in March. And then we spent the rest of the year really refining our strategy and kind of pursuing opportunities that made sense. I mean, you're seeing the results of that in 2020, where, it's been sort of multiple transactions on the same thing, but all that hard work was done in 2019. So I think it's a matter of really determining your focus, and I come back to that same word: focus. If you can intentionally build value, then your investors will reward you. I think that's all I can say.
Okay, and then who do you consider your competitors? I don't mean other royalty companies. Obviously, they are, but other forms of funding that these companies are looking at. I mean, how do you compete with those?
Look, we're focused on buying existing royalties. We don't really fund issuers that, in the real way. We haven't yet seen really compelling opportunities to do that. So they may come down the line as we get bigger, because at that point your cost of capital really rotates toward being able to finance, I think, potentially on much more attractive terms than your standard sources like equity or debt. But to date, we're focused on the market where I think people have a real reason to transact with us, and that's those who own existing wealth.
Okay. You must be happy with Tesla's commentary in the market about nickel. I think most nickel CEOs are. You must be too, surely.
I have an interesting view on that. Look, it's nice, I suppose, but I think the whole nickel situation is much bigger than Tesla. And it's like, and I think it shows you how early we are in the nickel game that we're talking about Tesla. So the thing is, like, this is a commodity that's going to be a key ingredient in the entire automotive space. And I think people still don't fully recognize it. And when we made the call on nickel in 2018, what we saw was that the entire car industry is going to depend on nickel, and it's going to fundamentally change the end demand for nickel, which has been stainless steel before, and now it's becoming automotive. So it's nice to see those Tesla comments, but to be honest with you, what we see is this mass adoption. Where I find nickel fascinating is, we grew up in this LME world where all nickel just trades at the same price, and it doesn't matter where it comes from, it doesn't matter how it's produced, it's just nickel. And I think now what you're seeing is, automakers have very specific requirements for where it's from, how it's made, what the quality parameters are, and you're going to see, I think, huge differentiation between different deposits. So it's not just going to be about the cost of production. It's going to be the method of production and the location of that production. And I think that's what's exciting. So when we look at opportunities, you want to find those strategic deposits that really can make a difference and can get that premium. So that's where we're focused more than anything else.
I mean, is that whole ESG component important to your investors? If you look at Changqing, they've said we're not going to do any more deep sea tailings dumps, which is great because I think another 3HPAL companies are following suit there. You're looking at people like Canada Nickel talking about zero carbon nickel production. It seems to be quite a thematic here, and I just wondered for you guys as a royalty company, is that part of the sell when you're talking to institutions and saying we will only invest in, or is it a case of we just need as many deals as possible, don't care whether it's clean, dirty, or whatever, we just need numbers?
I'll tell you, there's a lot of sort of buzzwords going around and all this. I like balance in all things, to be honest with you, and I think the world eventually goes toward balance. I think what we are seeing, there's a difference in terms of popular sentiment in terms of how the world wants you to extract materials. And I think, and if you don't want to recognize that, then I think you're going to have a tough time in this universe. At the same time, I think kind of jumping up and down and claiming you're ESG compliant in every way is overkill as well. So I think what we want to see is projects that an automaker can associate themselves with, both from the perspective of public relations and where it's located, and know there's some stability of supply. So I think it still comes down to those kind of building blocks of common sense in terms of what can go, what can't. You can be zero carbon 20 times over. If the project doesn't make sense, it doesn't make sense. At the same time, no, you can't put tailings into the sea like people have done before. That's just not how the world is going to function. So I think you just see what makes sense. But we definitely don't look at it from a perspective of just nickel. It's much more project specific, and can you actually see that deposit becoming a part of the supply chain, because it's going to be the customers that drive that. And I think that's a true thing.
And does the Philippines, Indonesia, China have ability to hurt your plans?
No, I don't think so. Listen, they obviously have their own sort of markets, and kind of every place in the world has its own rules for functioning. Kind of the way I see what we do, I think that the products that we focus on will be those that primarily go to EU, North American markets. Because this is where I think you're seeing those quality standards in terms of sourcing really increase. And I do think that when you look at what's happening, on the macro basis, it's not just a matter of economics. It's a matter of just how people see the world. And I think you have to be sensitive to that. So that. When we think about nickel projects or copper projects or anything else that makes its way into the supply chain, we just see the general sensibilities and where they're going, and we try to understand those.
Okay, so 2018, you looked at the EV thematic, thought it's definitely happening. 2 years later, what's your sense on timing for this? Because obviously nickel's, people are seeing a bit more interest, price up to $660 a pound today. Copper, again, done quite well in the last few weeks, but what's 2021 hold for both of those commodities?
Oh, I have no idea what 2021 holds. We're looking at this in a 20-year cycle in terms of where the world is going. If I had a crystal ball for what next couple of months are going to hold, look, what we see with nickel, just let's start with that. You're going to need your requirements for automotive nickel will go up roughly 20-fold from 2018 to 2030. Based on today's projections, which will be more than 50% of the current global nickel market. So that's a level of supply necessity which is quite dire. So the industry is going to have to figure out where this stuff comes from, and not just where it comes from, but economic and produced in the way that people can actually put their name on it. And that's the question that we always think about, And so, because nickel, particularly the nickel that you're going to need for automotive, has been so underinvested. There's some response is going to have to come. And when you look at the majors, they're all now saying we want to be in nickel. Whether it's BHP, whether it's Rio, they all want to be in nickel, but there's been so little investment. It's a whole new industry that's being born fundamentally. So, so they've been taking sort of these small pieces here and there, like BHP picked up Honeymoon Vale, for instance, but again, you haven't seen big swings taken yet, but that's going to have to come. So I think that's going to be the fascinating part of what happens with nickel. With copper, it's already a huge market. I mean, copper is the world's biggest industrial metal market. It's 150, 170 billion dollars a year. So, but you're going to ask copper to be something like the new oil, because you're going to be using copper to basically get away from fossil fuels. So putting a copper mine into production, there are simpler things to do in life than doing that. So it takes years of exploration, it takes years of planning, it takes capital, it takes community relations. It's a massive undertaking. So your copper supply has grown roughly 1% a year from 2015 to 2019. You're not going to be able to decarbonize the world with 1% supply growth. Let's put it this way. I don't know the number, but it's going to be much higher. So, our focus, find the best possible projects that fit that pipeline and get the royalties on that, and just build that portfolio, understanding where they fit in the grand scheme of things. No. And then when the commodity prices run, they run.
Yeah, but again, isn't part of your story, part of your job is to get the market excited about your project. BHP is saying, right, next year it's about nickel, it's about copper. BHP is saying that, right? They recognize that they need to get back into nickel. They haven't walked away from it. Same, you could argue to agree with copper. So there's momentum that is a big part of people getting behind your story. You're a 60 million market cap company, right? You're not a big company yet. So you're going to need that momentum in the marketplace. So having a view of what the short term looks like, I think, is important, because you can't keep pointing out to when some of these bigger projects of yours may get into production and start producing you cash. Don't you need to kind of drive that excitement too? Isn't part of your responsibility to do that?
Well, listen, you see, I guess, what the copper price is doing and things like that. But the thing is, and again, when you see short-term projections from, say, 325 or 350, we're buying, what we see is copper's going to go well over $5. The question is when it happens, so because that's the incentive price you need to get things going, so, to the degree that maybe we're not as focused on the short term, because when we see 325 and 350, that's kind of a drop in the bucket. Relative to what you actually need to build a copper mine. You're going to need to see $5, $6, $7 copper in order to get that going. So when you think of it that way, then you have to then you start looking at the project perspective and say, okay, look, which can get built? Who has the owners who have the wherewithal and the expertise? So obviously time value of money is a critical component in your analysis. So you want to price your acquisitions in such a way you give yourself a buffer. Everything we've done really has been a double-digit IRR, even on conservative assumptions. So when you can lock that in for decades into the future on high-quality projects that do have a future in this metal price, in this metal cycle, that's a super compelling investment. And mind you also get the benefit of production expansions that happen over time, because these big mines, they get bigger and bigger and bigger and bigger. So you have the benefit of compounding, which you just don't get in any other investment. So to the degree that you have to wait some time for them to get into production, that's fine. But the thing is, as long as you can price that conservatively today, even taking that lag into account, and you get all that optionality for free afterward with serious people that know how to do it, it's very hard for me, who spent his whole career in this investment business, to find a better way to invest your money, which is why I've basically devoted my whole life to this now. So I think it's super exciting, because you have a strategic need for these projects. You're going to need the commodity, and the commodity price cycle will be there, just given what you need. But then it becomes very project specific, because just because the commodity price cycle is there, it still means most projects out there that call themselves the future will be moose pasture. So then you have to focus really on the quality operators and the quality technicals. And so that's why we've been so picky about what we put into the portfolio. When we were just really starting out with Dumont, post that, people were telling us, just go take what you can get, buy some smaller things. But we understood very clearly, even at that point, you have to focus on quality, and you have to focus on things that have a legitimate future. So we bought NOVR Union in February of this year. 2 days after the acquisition, Newmont and Teck announced a drilling program of $152 million on our property. So you're talking about a very large project that can get much larger. So the drilling at that point was done maybe 500-600 meters depth. Maybe you can go to 1 kilometer. Who knows? But the point is, you need to put yourself into a position where companies that have the wherewithal to do something, their investment benefits you. So you have to. It's critical that you do that, because you can have the world's you may have some potential in there, but if you don't have the right operator who knows what to do with it, it's just going to stay there. So it really is, I think, very much of the sort of the rewards going to a relative handful in this sort of copper and nickel business. So like if you look at the incremental supply of copper, it's going to be 5-10 mines around the world that will give you that production growth on an annual basis. And so everything we do is trying to get royalties on things that can be that 5-10 at some point in the future. And if you can get there, then the rewards are much greater than you ever anticipated, because these things just keep on growing. I mean, right now, our copper industry was built by our grandfathers. These are like 70, 80, 100-year-old mines. So I take your point on, yes, it might take a while to get into production, but what I say is that wait is worth it, because once it's there, it's really there. This isn't, a 10-year gold mine, which sort of is in and out. I mean, this is really a lifetime asset. So
yeah.
I think that's super.
Billions of dollars of investment required. I get it. I understand it. How many more deals are you looking to try and complete this year?
Listen, we've done, I think, so far this year, it's 4 transactions, and so we've got a full pipeline ready to go. I mean, forecasting this stuff is never a good idea, but, we've been pretty successful so far. So we expect to be pretty active here.
Okay. You continue to be active, and I expect into 2021 as well. Yeah.
Yeah. Listen, I mean, we see ourselves, just to be clear, we think that this will be the best way to invest in the copper nickel space as far as the portfolio of royalties. So we see the entire commodity market as our potential universe. So we've got enough to do, no question. And so we're pretty excited here.
Good, man. I just want to be clear, so there's some questions sent in. So you've got Brett Heath has just joined you, who's of Metalla Royalty. Any more of the Metalla team joining you?
Right now we have Brett as an independent chair.
Right.
And then we're still kind of figuring out some of the pieces in terms of people, and we'll keep.
Oh no, thank you. No, I just wanted to clear it. So some people thought that the Metalla team, or a large chunk of the Metalla team, were joining you in some way, shape, or form. But no, you're right. It's your company. You're running it. Brett's come on board as an independent chair. Yeah.
Well, Brett and I put the company together back in 2018. EB Tucker is involved as well.
Okay. He is involved. What's he doing?
EB right now is a good sized shareholder.
Right, shareholder. Advisor?
He's an advisor, yeah. EB is an advisor to the company.
Okay, cool. That's good news. He's a good guy.
So, I mean, basically, look, we had kind of Brett and EB are great, kind of they understand the fundamentals of doing this out of the gate, so they've been invaluable. And then so we brought a team sort of inside the company, and then Brett and EB obviously were instrumental. Brett's now come as chair, and, we're still building this thing out.
Okay. And I'm going to ask the same. I've asked this sort of, but I want to ask it properly because the question's sent in. I want to make sure it's answered properly. How do you see the effect of Chinese tariff on base metals? Will this affect your cash flow, or it be a burden on shareholder value going forward? I think you sort of answered it, but just if you don't mind.
I mean, you can do whatever you want. You can put tariffs. You can try this and that. Commodity demand is commodity demand. The world is electrifying. You need the stuff. So again, I mean, you have to get it. You have to get the right stuff out of the ground in the right projects. That's a fact that's going to stay there. Governments are. I mean, you're in the age of where governments are going to be asked to take a much bigger role in the whole functioning of the world. And that's the social safety net programs. That's through economic management. So that's going to play its way through everything that happens. But at the same time, all of these governments still have to answer to the reality where they are. And we're not.
Okay, thank you. I suspect it won't just be Chinese tariffs, the way the world's going at the moment. But look, Alex, thanks so much for spending your time telling us this story. Like you, big believer in copper and nickel. I think it's exciting times ahead. Love a royalty, nice way to get exposure to it. A little bit less risk and a little bit more upside further down the line. I agree with you. Well done. Stay in touch. Let us know when there's new news.
Absolutely, my pleasure. Thank you very much. I hope this was clear in terms of what we're trying to do. It's we're excited because right now there's a lot of royalty companies in gold and silver. I think we're the only guys really focused on this space, and gold and silver. The reason you have royalty companies of gold and silver is because there's a strong fundamental macro trend, of owning gold, and people want to own gold through royalties. Copper and nickel before, no one really cared. They were just boring industrial metals, and then it's fine that you're useful, but no one really paid attention. But I think what's happening now with the energy change, these are now strategic commodities. So now you actually have a macro trend which makes it important to own copper and nickel somehow. And this becomes your vehicle to do that, just like the gold royalty companies are in your company. So it's a pretty straightforward story.
I think copper and nickel are sexy. They bring the sexy into base metals. Alex, good to speak to you. We'll speak again soon. Thank you.
All right. Thank you.